I love entrepreneurs, but I absolutely cannot get myself to invest in startups right now. What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset and welcome back to Make It Happen Monday. I love entrepreneurship. I've been an entrepreneur my whole life. I started my first business back when I was in high school because I started this event planning business, and investing is the path to wealth. So it would make sense for me to invest my money in entrepreneurs because I love entrepreneurs and entrepreneurship so much, but I just can't get myself to do that right now. Well, let me clarify that just a little bit. I want to invest in startups. I want to help fund and grow entrepreneurs who are hungry to grow their business because I just love that environment. But there are 3 reasons why I absolutely cannot get myself to do that right now. And I'm going to go over what these 3 reasons are in this video. But before we get into what these 3 reasons are, make sure you hit that thumbs up button below, right below the screen, and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. The first reason why I cannot get myself to invest in startups right now is because I'd be competing against free money. Money has been very cheap for the last decade or so. After the 2008 and 2009 crash, the Federal Reserve brought interest rates down to almost zero, and then they went up a little bit, and then back in 2019, last year, the Federal Reserve cut interest rates again and again and again, bringing interest rates down very, very low, close to zero, which means it's very cheap and very easy for people to borrow money. So now you have these investors and banks with all this cheap money and they need a place to put it. So they've been throwing this money, literally throwing this money into startups and businesses because they think that these businesses can never fail. But they're throwing these money into these startups and businesses, which bring the valuation of these companies so high that make it very unreasonable. If you've ever seen Shark Tank before, you might have seen somebody come on and say something like, "Hi, I have a business where I made $100,000 of profit this year, and you can own 10% of my business for $50,000. So if you are selling 10% of your business for $50,000, you are valuing your business for $500,000, and you are selling your business or a piece of your business for 5 times earnings because you made $100,000 worth of profit and your business is worth $500,000, or at least that's what you're valuing it. So you're valuing it at 5 times earnings. Well, take a look at this. Over here, I pulled up Netflix stock. Now, I know Netflix isn't really a startup or early stage startup, but you get an idea of what I mean by really high valuations. So over here in green, I have the PE ratio, which is 109. So this PE ratio is what you are selling for, how many times earnings you are selling for. Netflix is selling for 109 times earnings. That means if you have a business and you made $100,000 worth of profit, you are valuing your business at over $10 million, almost $11 million. So for every $100,000 of profit that Netflix makes, their valuation is going up by almost $11 million. That is insane. If you look at this from a fundamental perspective, like you're looking at the company, look at how much money they're making, and you look at the price of the company, it doesn't make any sense. But investors are still buying this up because there's so much cheap money out there. I mean, this is the environment that they live in where profitability is on the back burner and the only thing people care about is valuation. One of my good friends lives out in Silicon Valley and he works with a lot of these tech startups. And I asked him the same question. I said, aren't you worried about these crazy high valuations for companies with no profits? And he kind of just laughed. He said, why does profitability matter? All we care about is growth. And you know what? That's fine when money's cheap like this. Who cares about making a profit? I mean, you can just go to someone else and raise another couple $1 million. It's not that big of a deal. But when interest rates become tighter or higher and the market slows down and you can't find that easy money, well, that's when real problems start to happen. And as Warren Buffett says, when the tide goes out, that's when you see who's been swimming naked. 2, a lot of businesses are infected with the too much money disease. If you're a young entrepreneur with an idea for a business and somebody hands you a $100,000 or $1 million check, you're not gonna know what to do with it. You're not gonna know how to spend this money very smartly. I mean, when I was starting Minority Mindset, somebody handed me a $100,000 check, I would have definitely blown the money in the wrong ways. I would have bought a really nice office and hired employees that would not know what to do. But that's what you do when you have a lot of money. And right now, where it's so easy for businesses to raise money and get money from investors and banks, I'm seeing it all the time. Businesses have this too much money disease and they don't know how to use their money. Like one company, which was a financial company, came to me and they said, Jaspreet, we love the content that you're putting out there. We would love to work with you. Can we put your content on our Facebook page? Of course you can. I love when people share our content. But that wasn't the end of their sentence. They said, we would love to share your YouTube content on our Facebook page and we will pay you $500 per video that we share on our Facebook page. Just sign this paper and we will send you a $2,000 check so we can share these 4 videos on our page. I work with a lot of entrepreneurs and I cannot count the number of businesses that had these fancy offices and high rises with glass doors and people running around the office and rollerblades. They look very successful at first glance. But if you look into the numbers, they are bleeding money. Like if you're subscribed to the Minority Mindset Financial Newsletter, you heard us talk about Lime scooters recently. Lime scooters are those electric scooters that you see in big cities that you can just pick up, scan on your phone, and then turn on and ride it around for just a few bucks. Well, Lime scooters grew very quickly. But in 2019, Lime scooters lost around $300 million, and now they're having to scale down the business because their investors are like, okay, we can't just keep throwing money at you like this. By the way, if you have not subscribed to the Minority Mindset newsletter yet, why haven't you? It's a free financial newsletter where we first break down the top finance and business news, and then we deliver this news to your inbox every single morning. This way you can be smart with your money. The newsletter is completely free, and you can subscribe on our website by clicking the link up here or by clicking the link in the description below. So when I see these companies with the super high valuations and the too much money disease, it makes me want to be patient, because when money becomes tight, that's when these companies are really going to start bleeding and they'll need cash, and that's when I can come in. But there's one more thing you need to know. 3, we are in an environment where startups are looking for a way to get rich quick instead of building a sustainable business. Now, before you start yelling at me, I know this is a broad overgeneralization and not every entrepreneur is like this, but we are in an environment where there are a lot of entrepreneurs out there starting businesses not to change the world and make an impact and change their society, but to get rich quick, because if you know the right people, you can raise a lot of money very quickly and get out. I talked about how companies are having these really high valuations with all this cheap money out there and there's too much money disease. Well, now this is becoming a real problem because you are seeing more and more founders and owners of businesses worry about the valuation of their company, this way they can sell their company and get out, than they are about actually building a profitable and sustainable company. This became very apparent to me because I was working with the startup fintech company, which is a financial technology company that wanted to compete with the big micro investing apps out there like Robinhood and all of them. So this company came to me in the early stages and they wanted to find a partner / investor to work with so they can grow. And I was asking them about their goals and what they wanted to do. What he told me was that right now, all he cared about was getting 10,000 downloads for his app. And I said, okay, why? He said, if I can get 10,000 downloads right now, I can go to Wall Street and value my business at $2 million and raise a ton of money. Now, if you have the right marketing in place, getting 10,000 downloads isn't really that hard. But as we talked more, I learned that he cared more about his valuation than he did about his customer success and his users. I mean, he just wanted to play the burn and churn game. Like, let me get these downloads right now, this way I can go raise a few $100,000, keep a little bit for myself, and then use the rest of the money to go buy more users. This way I can go and raise $5 million. That way I can keep some more money for myself and then buy more users and then raise $25 million and then keep more money for myself and then sell the business, and then I'm gone, and then this business is someone else's problem. It doesn't matter if people are downloading your app and it sucks. What matters is that you can just keep buying more users and show growth, because investors are not caring about profitability. They just want to see how many users you have. And if you can keep doing this burn and churn game, you get money and you buy more users and you keep doing this, eventually you'll get a high enough valuation where you can sell it for millions and millions of dollars and walk away with your money, and then somebody else is left with the problem. Yeah, I can't work with entrepreneurs like that. So as much as I want to jump in and start investing in all these startups, I'm biting my tongue and being patient right now. I don't know how long this environment will last. Maybe it'll take years, but that's okay. I'll keep a little bit more money in cash and I'll invest more in my business and be more picky with the investments that I do make. But the one thing that I will not do is blindly jump in and start investing in things because everyone else is doing it. Because right now, People literally think that these unicorn startups with no side of profitability can never fail. We've seen that happen before, but when the time is right, I'll be ready and I'm gonna jump in head first, and you can stay up to date on what's happening by joining our free newsletter. Oh, and if you do want to learn more about this topic and companies being really overvalued, I made a video talking about this and you can watch it by clicking this button right here. Thank you for watching, I'll see you next time, and as always, keep hustling.